Muted. Good, 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 good. All right, all right, all right. Welcome in, everyone. Welcome in. This is our summer business and tax series, and I'm so happy and grateful that you're here. If you don't know who I am, I'm Dr. Lilly Mbinglo, a licensed CPA in the beautiful state of Virginia, serving clients all over the US and all over the world. Okay, so we're in for a treat today. We have to dive right in because the team knows that when I get on here, I get excited and then I go over time, and that's not fair. So I want to go right in. We're going to be covering two amazing topics today. We're going to be talking about mistakes or errors that business owners make during summer. Because when summer comes around, depending on your industry, it's either your busiest time, which means you're making a lot of money, or it's slow time and you're having too much fun that you forget that there are things you have to be doing, because business does not, according to the IRS, summer does not exist. Okay, they look at you full picture, and we always want to have that mindset even when it comes to summer. That's our first topic. And then the second segment, I will be talking about how to pay yourself as a business owner. You will not believe it, but there's so many business owners who do not know how to pay themselves, or how they're supposed to move money out of their business. What is that even called? How does that get taxed or treated for tax purposes? So those are the things that we will be talking about, because I don't want you guys getting in trouble. Like, you're building a business, you're making money. I want you to do it the right way, and the least way that will bring you any issues with the IRS, right? So let's dive right into it. Like I was saying earlier, when summer comes around, for some businesses, it's slow time. So you relax, you spend more time with kids, your family, your loved ones. But as a business owner, you cannot lose focus, right? Just because it's slow doesn't mean the responsibility that you have as a business owner, they cease. No, they do not cease. You still have to carry on. And then for some people, it's a busier time for their business, and they have to hire more people, they have to hire help, and those kind of things. And if you don't do it right, you end up with so much trouble come end of year, you filing your taxes, and Uncle Sam is like, yo, come, we have to talk. All right, so I put together a couple of mistakes that business owners make, and I just want you, if you're a business owner, please watch this video. If there's anything here that you're not doing right now, to start to implement it. If you're doing it already, give me a shout out and say, I got it figured out. All right, so let's dive into it. What's the first mistake that business owners make? Who can guess what it is? Who can guess what it is? Yep, failing to track their records accurately during summer months. Because it gets slow and people get overwhelmed with travel, with family fun, they fail to document their records. And that's the worst thing that can happen. Because once you miss documenting your records accurately and on time, because that's the most important part, is the on time part, you tend to forget what you did, why you did it, and sometimes even the amount that you spent. And then come end of year, you're trying to reconstruct financial records, sometimes exaggerating numbers or under-reporting your expenses, which ends up putting you in a lot of in a tight spot. Either you end up paying more taxes or getting into trouble with Uncle Sam. So my recommendation to you is, even while it's summer, stay on top of tracking your records. And that goes for everything, including things like mileage, right? We talk about summer travel. A lot of driving happens. If you drive for business reasons, you want to document that. So, you're documenting your business income and expenses accurately, classifying them. But even the other things that impact your business, like your miles, you want to document that. You guys know the mileage for this year is 72.5 cents. Can you imagine, for every mile you drive that is business related, you can write off 72.5 cents? So think about it. Just 1,000 miles, that's $725 of business expense. So if you fail to document your miles, guess who just left money on the table? You! That's why in the summer you cannot slack off. All right. So documenting everything, which means record keeping, it's one area that I want you to prioritize. All right, it's a big area that I see taxpayers, business owners making a mistake in, and I hope that you avoid it. If you're listening to me, you don't lose sleep. Okay, you're on top of things, like whether you're using AI or you're using an actual bookkeeper, be on top of it. You're doing it yourself, be on top of things. The second error that business owners make during this, summer, and I don't blame you guys because the timing is very odd, is failing to pay estimated taxes for second quarter. All right. The way the IRS has the quarter tax calendar is very interesting. So For the third quarter, let me start with the first quarter. First quarter taxes are due April 15th. Second quarter taxes are due June 15, not July 15, which means once you pay the first quarter estimated taxes, April 15, you don't have much time to pay June 15. And when summer comes around, many business owners get very distracted. Now, don't get me wrong, if your business is not profitable, that's a different story. If you're new to business, this might not apply to you. But for those who've been in business, whose business is profitable, and you know you're supposed to send in your estimated taxes, file and pay your estimated taxes, please do not miss it. And if you already missed the June deadline, you're watching this video and going, oh snap, don't wait until September. All right, just go ahead and pay. So I was talking about the schedule. Guess what? The IRS has it this way. They have April 15, first quarter, second quarter, June 15. So after May, you have June. And then they have third quarter, September 15. And then the fourth quarter is due January 15. It's such an interesting calendar. So if you're someone who pays estimated taxes, it's in your own good to make sure that you are on top of these dates. Don't get too distracted by summer. Those are the errors I see. And there's a safe harbor rule. The safe harbor rule is if you're not certain about, what you're going to owe for the whole year, at least pay 100% of your previous year's tax liability. So if last year you owed about $10,000, you want to make sure that this year your estimated taxes is covering $10,000 for all 4 quarters. Or if your adjusted gross income, AGI, was $150,000 or more, you want to pay at least 110% of the taxes that you owed last year, okay, for estimated taxes this year. That's kind of the safe harbor rule for anyone who is watching this and it's like, I'm not sure how to do the calculations. That would normally help you, okay? So when we have clients file taxes, we have the system already create some of these estimated tax forms for them so that they can send it in. Now, that could change when you file your taxes, but at least this will put you in a better position so you don't have a lot of interest or penalties accrue by the time you file your taxes for not withholding and paying enough estimated taxes. Okay, now the next thing we want to talk about, and one thing, please, if you're struggling with withholding taxes, just set up a separate bank account. A lot of business owners always use one account for everything, and if you've not been setting the money aside for taxes and you have an emergency, there's a high chance you're going to use up the money in your account. So set up a separate account if you can, where as you every time you do your books or you recognize how profitable you were in a period, you just take out the money for taxes. Or depending on how you get paid, when money comes in, take out the amount for taxes. Okay, take out your about 30% is a fair estimate, because you have to pay self-employment taxes depending on how your business is set up, and then income taxes as well. I hope that helps. Okay, so the third mistake I have seen that business owners make a lot is wanting to claim personal vacation travel as business travel. That's unacceptable. Okay, now, you know that I'm a big proponent of incorporating business with personal travel, so a portion of your travel can be written off for the business that you did, especially if you're doing something that is going to move your business forward. But please avoid taking your kids to Disney and then coming to claim it was a business expense. Come on, that's not right. Okay, so generally when you travel for business and you have to stay somewhere, the IRS looks at it like you're away from your regular home and you can't make it back in time. You have to stay over there, right? So if you travel for business, maybe spend a couple of days and then you choose to remain and do something for personal, for family, just remember that the time that you're able to write off is the time you spend doing business, that you were able to go back to your regular home. Now, choosing to have personal time is great for family, but that should not be considered a business deduction. And also, you cannot include your family members as part of your business deduction if you were trying to combine business and pleasure, unless, if you've been listening to me, if you bought my book, unless you hired your kids to work in your business and your spouse to work in your business, then now you're with your employees. And it's a different story. All right, I will come to that later. For now, we're talking about some of the mistakes business owners make, and this one on travel is always a big one. So you want to watch out for that. If you're doing summer travel, be honest. Let me tell you guys something. It's so easy to be dishonest with taxes. That's why you guys hear about a lot of fraud. But if you really want to build something sustainable, is it worth it? It's not. It's not. Like, if you do things the right way and you come to someone like me that can provide you with the right guidance on how to document your business and your family so you don't get into trouble, Uncle Sam, you're going to be in the game for long. It's never fun when Uncle Sam is coming after you for lying, and then you cannot prove things. Like, it's never fun. So for my business owners that are building, I'm hoping that you're building this stuff to last. You're not trying to look for corners. Don't get impressed by people that just write off stuff on your taxes. It only gives you a little bit of a little bigger refund in the short run, but the issues that will come later on, they are not worth it. So do it right, okay? Then the fourth mistake that we typically see business owners make is that when they hire workers during summer, they don't classify them correctly. Okay, and this is very important. So if you remember, I was talking about during the summer, depending on your industry, stuff changes, right? So if you're in an industry that does like birthday parties, summer parties, you're probably busy doing hire help. Now, you want to be careful if you're hiring help, make sure that they're actually classified the right way. So if you get help that has to be in the office continuously for 3 months at a certain time, and you get to decide what they do, how they do it, where they do it, and they use your computers, those are likely employees. Okay, even if it's just for 3 months, they are still employees. So you want to avoid a situation where you're hiring someone in a certain capacity and wanting to classify them differently. Now, if you hire independent contractors, you want to also make sure that you're classifying them correctly. Okay, and the big part in addition to this is making sure that the people you hire, they complete their W-9. So W-9 is the form you give to people that you hire as independent contractors. Some business owners are usually so desperate and so anxious to hire people when summer comes around that they don't pay attention to all the documentation that they have provided. If they completed their W-9 correctly, we've seen situations where people use fraudulent social securities, right? And because the business owners were just trying to rush, they did not do their due diligence of verifying if these social security numbers were right. You need to have them bring their actual social security card, bring their ID, vet this documentation just to make sure that by the time the end of the year comes, you can report what you paid them and issue them that 1099 for them to file taxes. If you don't, you're going to face issues with the IRS. And so we want to avoid situations like that, okay? The next, let me go through my notes, make sure I don't miss anything. So the next mistake that I see you guys making, not hiring your kids. Like, why are you not hiring your kid in your business in the summer? Like, what are they doing? Okay, they're home. They're spending money. Jeez, every day my daughter is trying to subscribe to something on Amazon. I'm like, no, work your money, make your money, right? So in the summer, if you have kids that are within the ages of like 7 to 18, there's absolutely no reason your kids should not be working in your business, okay? So I see business owners making that mistake. Hire them. We've talked about it already. Your kids are a significant tax deduction. You know, if you pay them less than the standard deduction for the year, you're able to write off what you pay them without issuing them a 1099, a W-2, so long as you're claiming them on your taxes and they're less than 18. I mean, like, how could you miss that, right? And not only that, you're also teaching them life skills. You're helping them learn leadership, learn responsibilities, learn how to earn money, learn how to be valuable, right? So please, if you're a business owner, don't be one of those people that is always saying, I'll wait till they are grown. No, from when they are 7 years old, make sure you grab my book. I have a copy here. Yes, grab my book. Hire your kids, save taxes, build a legacy. And you can see all the different job descriptions that are there. So don't miss out on that. All right. That was my fifth one. The sixth one that I've seen that mistake business owners make is those that do a lot of vendoring and travel across states to sell, and they forget to send the sales tax that they collected in those different states. We call it nexus, where you go to a different state, you sell, and you don't send the tax. Please, if you're going to be selling stuff across state lines, even if it's online, you want to research what your nexus is. What are the taxes that you collect that you have to remit to the different states? Okay, please. This is very serious, you guys, because when you do not do that, it means you took the state's money and you're sitting on it. Because sales tax is something you collect on behalf of the state. It's not your money. It's not part of your revenue. It's money that you collect in the course of selling, and you're supposed to remit it to the state. So please, if you're one of those people that sells across state lines, make sure that whatever sales taxes that you're collecting, that you're able to remit that to the different states. Okay. Then the seventh one, which is the biggest one, is a lot of business owners are not meeting with a CPA to do a mid-year review or any kind of tax planning. All right. So around this time, especially if your business is, if you're going through a slow season, even if it's a busy season, you want to understand your numbers now. Or in the mid-year, we'll finish the first half of the year. What are you doing? Do you know how your business perform? Do you know if you've got a return on your investment in marketing, a return on your investment in staff, return on your investment in the technology that you acquired? Maybe you paid for all the AI tools. Are you getting a return on your investment? We wouldn't know until we can look at your numbers and see where your money is coming from, right? If you've been advertising on Facebook, what does that look like? Do we see a lot of clients coming from there? When you look at your revenues, do you see a lot of clients coming from there? And so you can plan if you're going to continue advertising more on Facebook or not. But those are the conversations that you want to meet with someone like me and talk and have, right? Talk about those things. We want to look at the trends in your business. We want to understand what strategies can you start implementing in your business. Or maybe I've been talking about some of these strategies and you don't even know how to go about it. This is where we talk, right? Let me walk you through what it's like to hire your kids, how to create that job description, how to pay them, and all of that. All right. So please make sure that you're prioritizing tax planning at this time of the year. Do not wait until it's the end of the year and you start scratching your head, right? My first thing is, well, not my first thing, but my favorite line for taxes is that taxes are really predictable. They are, but they're predictable for those that plan and strategize. So you can almost tell what your tax bill is going to look like before the year is over. But that can only happen if you're meeting with a professional and having these heavy conversations. Okay. And then my last one for you, which is going to transition us to our second segment here, is a lot of business owners are commingling personal and business money all the time, and they're not documenting or they're not paying themselves correctly. So when someone comes around, and I know if you, especially for those whose businesses might be slow or because they're doing a lot of stuff with kids, it's very easy to just keep swiping your business card even for personal stuff. But that's where you could easily get into a lot of trouble with Uncle Sam. All right. As a business owner, you want to know how to pay yourself so that way you do it appropriately based on your business entity structure, and then enjoy your money without having any compliance issues. When tax season rolls around and the IRS is like, yep, this is not a business expense, this is personal. So you want to make sure that at this time you're really separating your funds, personal funds from business funds. Pay yourself and then spend your money. Okay. So I should not be looking at your bank statement. If I were the IRS and I'm looking at your bank statement and it's showing that you are going to ABC is the alcohol shop, to go and get drinks for your 4th of July party, you're telling me it's a business expense? Of course it's not. Well, maybe you might claim that you invited some clients, but just coming back to what I was saying, you want to make sure that you're separating your business and your personal funds. You do not want to mix that. And if you do, because sometimes life will happen where maybe you paid for something personal from business, or just make sure you document it correctly. All right. And this brings us now to the second part of our